Yeah, welcome to ShareTreck. This is Raj here. Friends, I have the home screen for us today, and fear and greed index has somehow improved from where we were yesterday and gone a little bit up to 22. That's a good sign, in my opinion. S&P 500 futures at the time of making this slide was at around 3.45% down from the previous close. Nasdaq was down 3.95% from the previous close. All of these are futures. And VIX was up 2.51%, sorry, 21.51%. That's huge. And then we have 10-year yields, which were down 0.75%. Gold was down 1.29%, and I was expecting gold to come down, but I did not expect that to coincide with this Rose Garden announcement, because gold had overrun where we expected. There's a long-term resistance line. I'll show you in the chart when we go to trading view. We had gone above that, so we'll cool down a little bit and then pick up, but long-term, I think gold is still going to keep on moving up. And then, of course, Bitcoin is up 0.90% in pre-market trades right now. But Bitcoin generally follows S&P 500, so I'm expecting that also to move downwards. During the time that I was preparing this slide, I was watching S&P 500 go up and down. So there's a little bit of volatility out there. So I don't know how it's going to open when the market starts up. It will still be red, but I don't know if it will still be 3.45% or it will be higher or lower than that. But it's definitely going to be a red opening this morning. And then let's move on to the main headlines that we have today. Give me just 1 second while I adjust my OBS screen so that I can also see the comments on the side so that we can have a good discussion here. So I'm looking at the headlines that attracted me this morning. The first one was auto giants surprisingly resilient as sweeping U.S. tariffs spare Canada and Mexico for now. For now is the key word out here, because we are under the Canada-U.S.-Mexico Accord. That has got exemption for a whole lot of things, and those are not being touched right now. But the officials are looking at what are the things that are not covered under Canada-U.S.-Mexico agreement, and those things will get tariffed, and they are working it for now. So that'll be a little time. Again, for Canada, steel and aluminum tariffs are still online. So it's not all clear at this point of time. The only relief is that reciprocal tariff is not there. Now, next one I'm looking at here is Dow futures tumble 1,000 points on fear of Trump's tariff, that the Trump's tariff will spark trade war. And that's a no-brainer. Everybody got outraged. Tariffs, Trump tariffs inside, fury in China. This is the next headline that we have out here. And I think I would look forward to some feedback from Hot Dog. I'm looking at the comment section. Hot Dog is saying Australia got off lightly, to be honest, and just beef trading, that's all. And nothing about China. Australia, US is our biggest trading partner. And a big hello to all of those people sitting with Sandeep and watching this live stream. Big hello to all of you guys. So there you go, Sandeep. You got your shout out. Next, I'm looking at the other headline. Trump will buckle under pressure if Europe bands together over tariff. That's what the German economy minister is saying. This is somewhat similar to what the Canadian prime minister and the provincial chiefs are saying. That is, if we remove inter-province trade barriers, like things like making sure that if you're a realtor in Ontario, you can sell everywhere in Canada. Or if you are an electrician in one province, you can work in all provinces. So those kind of things that federal government can do, it's going to do in collaboration with the provinces, and thereby remove trade barriers and increase internal trade and compensate for what is lost by not trading with US. A similar idea is there in the EU as well. If all the European countries got together and removed some of those restrictions that are still present, then free trade within Europe will compensate for what is lost with the US. And then if US is alone on its own and also starts feeling pressure on its dollar, then I think things will all come back to head. But when I was listening to Trump yesterday in the Rose Garden, I can appreciate where he's coming from. because US is a developed country and it has got the reserve currency status, along with that comes responsibilities. And those responsibilities were configured in a manner by the past presidents where they used soft power and they were spending money on helping less developed countries to come up, and they're spending money on defense of various areas which are vulnerable in the world and protecting the global trade routes. And therefore, they had a very big say. They didn't have to come out and shout and make a show of strength. They just had to call the president or prime minister of any country, and they were willing to listen to US. But the approach that Trump is taking is that he doesn't recognize the soft power and other things. He's more transactional. And he's saying, we are the big daddy out here and we have the big stick and we are going to use the whip and you all get in line. How that is going to work out, I don't know. But what he's trying to achieve is a right thing for United States. They have to reduce their deficits, they have to reduce their debt, and they have to reduce their spending. This could have been done in a more elegant way and in a more diplomatic way. It would have taken a little longer time, but it could have been achieved. But this is the way we are going. So as retail investors, we have to put aside all our political feelings from the point of view of our own country. Like as a Canadian, I do tend to feel a little bit outraged, just like the Chinese are doing. But he's got to do what he's got to do, and we as retail investors have to keep all these sentiments aside and look at the pure data. It's a very tall order for us, but that's what we got to do. Now, if you look at the other headline out here, it says that Trump's new tariffs worse than the worst case scenario. So these are the three quotes from analysts, right? So Dan Ives is not happy with it. Absolutely nothing good coming out of Trump's tariff announcement. That's what the analysts are saying in reaction. And Jim Cramer is saying that Trump's tariffs are more punitive than reciprocal. So overall, the verdict is that nothing good is going to come out of this, and we are not happy about it. So that's what we have here. Then I would like to go to the economic calendar. And I would like to point out that we have the ISM services PMI coming out at around 10 a.m. This is likely to be a bigger number because I think this is March data. And by March, we had already started preparing for this tariff. Therefore, there will be a lot of front loading of inventory, manufacturing, and everything to beat the tariffs. So I wouldn't worry too much about that. It's going to be higher, but it's higher because of a particular reason. Then we have the non-farm payrolls and unemployment rate. These things are likely to spike up because the Fed layoffs from Doge and all is going to kick in and get into that area. So I'm looking forward to see what happens out there. That can also have an impact on the market. And at 11:25 a.m. on Friday, Fed Powell is going to come in, and I don't know what he's going to say. Is he going to try and perk the market up? I don't know. I don't know what tools he has in his hands. If he reduces interest rates, then the inflation will go up. That will kind of try to support the business. But the tariffs that have come in, they don't have an end date. It's what the communique says is that as and when President Trump feels the objective have been met, the tariffs will be lifted. So if we don't know when Trump is going to feel what, right? And what he feels may or may not be logical. So from a market perspective, the uncertainty is still there. And most of these companies, even if the interest rate goes down, before they expand their manufacturing capacity and start employing more people, they want some kind of certainty, because if they put a plant, it takes time to put it. And if they do it on a fast track method, it's going to take extra money. And then they need to make those monies back. Same is the case with the promises made by many big companies like TSMC and others to invest in US to build up their plants and facilities and to boost the manufacturing in the US. I was listening to Meet Kevin, and what he was saying was that all these are just major declaration. It is photo op for the president. Many companies are rebranding their pre-planned capex into something like what you would say as what you would like to brand as, we are doing this specially for the US because we'll be selling more in the US, and we are responding to the president's need that there should be more manufacturing done within the country. So that's the way they are positioning it. And if Kevin is right, then I am thinking that all those announcements will be exactly like the announcements were in the first term when Foxconn made a very big announcement that they're opening a huge plant, and that plant never came to be. They had a photo op and nothing else happened. So I'm thinking that those kind of things could happen. Even if Fed Chair Powell comes in and says that I'm going to reduce your interest rates, I don't think that's going to help much. In fact, in the 1970s, when we had stagflation, reducing interest rates on an ongoing basis made the inflation worse and did not improve manufacturing and employment. And therefore, Volcker came and increased the interest rates significantly to get everybody out of the stagflation. And then we had lost a lot of value in the economy. It was a lost decade. Now, Hot Dog is saying, I think Vietnam got the worst stick, 46% on everything for a small, poor country. Absolutely. Absolutely. And also, I think Vietnam got business from China, I suppose, because China was under the scanner and under a lot of pressure from the US. Therefore, they moved their production into Vietnam. So it's just a matter of time before they take it out from there and move it somewhere else, which is not under US pressure. I think UK got the I think UK got a worst deal also because they already had 10% tariffs and the tariffs got matched. But if it was reciprocal, right, I was thinking that UK would probably have more tariffs coming in from the US. The fact that UK got separated out from Europe has made it much better for it. It's kind of in a better position by not being with the euro. If it was with the euro, it would have faced much higher tariffs. So I must correct myself. UK got the best deal among all. So 10%, they had a 10% tariff, and President Trump put another 10%. He was talking about VAT being punitive tariffs, and I was thinking, how can you say VAT? Because you also have sales tax in various states. But fortunately for UK, he didn't go in that direction and tack on an extra 13 or 14% on top of the 10% and made it 25. That did not happen. So UK got off well. And David Best is saying, put your feet up for 12 to 18 months and watch everyone else try and catch falling knife. David, out there, I would differ a little bit. The markets are all forward-looking. So even before we come out of this, the markets will start going up. So personally, I'm doing a little bit of dollar cost averaging, and I'm focusing on Berkshire Hathaway because it has got the cash and it's investing in Japan, which is outside of US. And it's a bit of geographical diversification. And also, I would trust Warren Buffett to do the best with the cash that he has got and get some really good deals. And David Best is saying why. It was money printing and not free market capitalism that propelled the index of low during COVID. Yes, I agree, David, but the dollar has already lost its purchasing power. So if we were to look at it from that point of view, I would focus on gold and I would focus on European markets and Australian markets and maybe China, because those countries might be better off as the US dollar becomes weaker. But you bring a good point. It's not a cut and right thing. It's not, I would say, it's not 12 to 18 months of wait. At the same time, it's not like, start buying like greedy right now. So we'll have to find a balance somewhere. I honestly don't know the answer. David Best said, every crash ends in banking crisis. Let us see what happens out here. And yeah, I take your point, David. And let's go on ahead. Let's go to the next point that I want to make. Look at the stock market heat map. Okay, I have taken a 1 week performance. In the 1 week performance, what I see is that consumer defensive is doing well, utilities are doing well, and a good portion of the basic materials are doing well, the specialty basic materials. So, and also gold and silver are doing well. These are all the symptoms of recession. And I'm thinking that the market is looking at recession, and maybe we watch this on an ongoing basis and also change our portfolio. to show a recession-proof kind of a stock holding in that. So for that, what we would pick is if you can go back and look at the two videos that I published, part 1 and part 2, where I was talking about what is a recession, what is stagflation, how do the various sectors behave. And in part 2, I had given a bunch of ETFs that are good for each of those areas. I think gold and silver are common among both stagflation as well as recession, and some utilities are also common. So just have a look at that. I'm also going to go back and have a look at those charts and see if I can start to dollar cost average into some kind of ETF. And David Best is giving a good caution for all of us. Don't let inner gambler get better of you. Must sell off ahead. Point taken, David. Okay, so next let's go on into our futures. Futures are at minus 3.33 for S&P 500. And when I had started making the preparation for today's live stream, it was at minus 3.48%. So to that extent, it has improved a little bit. And yesterday we had a gap down after the market closed, and we are down here just at the minor line of support, which I had drawn at 5526.75, which was taken off the last time that we turned back up. It was the end of the flagpole for the bear flag. So I had taken this as a minor line of support, and we have fallen below that minor line of support, and our actual support is 5,439.50, which is an area of heavy purchase, heavy support. So this is going to be difficult for us to break down from. And now a lot of analysts and economists are going to be parsing the information that we got, and they will be coming up with some silver lining and some negative. Remember, in the media, there are pro and anti whatever Trump is trying to do. So you'll get stories from both sides. And it depends on how various investors work. And David Best is saying, don't let the inner gambler get better off you, must sell off ahead. That advice may not be taken by many people. They may not be able to adhere to that advice. And they are going to let their gambler speak. And that's going to be influenced by their political bias. So we are going to see a lot of volatility until the market figures out where we are going. So let's watch what happens. As a retail investor, let me say, I am afraid right now. I don't know what's going to happen, but I'm looking at safe bets where I can take a little bit of dollar cost averaging, maybe 100 out of the 1,000 that I might buy. I'm looking at Google. I'm looking at Berkshire Hathaway. I'm looking at Microsoft. I'm looking at NVIDIA. So these are some of, and Meta. These are some of the stocks that I'm looking at. I'm not at all looking at genomics right now, because genomics is going to be very dicey, most of the stocks. And if I did look at genomics, it's going to be Illumina and CRISPR. Those are the areas. So having said that, let's go on and look at NASDAQ. NASDAQ is down 3.90%. And we have this diagonal line of resistance that I have drawn from the past. And we have gone below that. And we have a doji candle out here, indecision in the pre-market, but we are still below this diagonal line of resistance. And our next support is going to be 18,543.50. We have to also make allowance for what Fed Chairman Powell is going to do. And if Powell says something that Trump doesn't like, Trump is going to tweet out and say that he doesn't like that and Powell should do something else. And that's going to also cause a little bit of impact on the market. So watch out for all those things, totally volatile. And all of us should remember that we have to put our political ideology and economic ideology aside and look at what the market is doing. The market consists of millions of people from across the globe and from across United States with different ideologies and different psychologies. All of them are looking at all of the emerging events, like what Powell is saying, what Trump is saying, what their own media is saying. And then they will make some decisions. So we are in for a very volatile day. If you look at the dollar index, you can see that the world is expressing its anger at the dollar, and the dollar has fallen. USD JPY has shown a dangerous move towards the yen unwind trade. So I'm thinking that that's another front one has to look at. And I think for this, Bird Dog will have a better idea of what happens with the yen unwind and when it will get triggered. But this sharp drop out here kind of makes me think about it. And next, let's look at the 10-year yields. 10-year yields are showing that we have dropped below this diagonal line of support, got back into the bear channel, and we are looking at potentially, in my estimation, going all the way up to 3.558 in the near future. A little bit of improvement is seen out here. Whatever Chairman Powell says can help it either come and face the resistance today or go down further. So that said, yeah, Hot Dog is saying, yeah, we'll be watching Japan closely. Yes. Now let's go on to AI, which is what we want to look for. And yeah, they are between a rock and hard place. In Japan, there are a lot of retirees who make money out of certain investments, and their housing market also, I don't know how strong it is. I think they've opened up for foreigners. I don't know much about Japan, but in the past, I had done a video on why their interest rate is so low and why they are not increasing the interest rates. I've forgotten all of those things, but I'll just go back and brush up my fundamentals before our next live stream. And we'll have a little bit of a discussion about that because we have to start watching the yen unwind trade and also the Japanese economy as it relates to the United States. AI bubble has begun to break down, says David Best. Yeah, possible. Now, let us look at where we are with NVIDIA. So we ended NVIDIA yesterday just above the line of resistance of 107.12. But in the post-market session, we dropped significantly. We converted 105.84 also into a resistance. And right now we are at 104.37. So our resistance for today is 106.13. And our support for today is 101.98 for NVIDIA. MACD is bearish, momentum also below average. If you look at Meta, Meta is down 4.67% in pre-market trades. Yesterday, we had the support of 581.47, but we closed below that in the post-market session yesterday, and we came down all the way to, I don't have the numbers exactly out here. We came down all the way below 581.07. So I'm making this into a red line to show that it's a resistance. And pre-market today, we are still below the line of resistance of 581.20. We are at 556.65, which is somewhere out here, just above 550.12, which is our next support. So our next support is going to be around I would say 549.77, and our next resistance is a 200-day exponential, which is at 578.06. It is this white line that you see out here, that is 578.06, which is the resistance. We're going to move between those two, and if we break down from this support at 549.77, our next support today is going to be 541.90. Next, let's go on to Google, which is what I'm looking at very closely. Google is down 2.70 in pre-market trades. And yesterday, it ended at 158.86, which was somewhere out here. And our support was at 154.92. And it still remains our support at this point of time. And right now we are at 154.56. So 154.92 is more than 154.56. So I think that I'll be a little ambivalent about this. Right now, this is acting as a resistance for the pre-market trades, but we don't know how pre-market will end up in the opening. So I would say that if the support at 155.05 does not hold in the pre-market, it will become our first resistance. And the second resistance is going to be the second support is going to be 152.31. So our support today is 152.31. Potential resistance is 155.05. And the next resistance that we are going to have is going to be at around 156.67. 156.67 is resistance number one. Potential resistance number two is 155.06. The first line of support is 152.39 today for Google. And then we are saying Amazon. Amazon is down 5.92% today. Yesterday, we ended up somewhere around 196.01. And then we had support out there at 195.64. And we converted that into resistance already because post market, the stock started falling down. Right now, we are at 184.51, which is just above what we have here as the support at 184.17. It's just marginally above that. So right now, our first support is 184.17. The second support, I'm going to just make this support line a little thicker. Our second support happens to be at 180.23. Our resistance is going to be a very strong resistance at 191.89. That's the range in which Amazon is going to move. This is again another stock that I'm interested in. And I hear you, David Best, we have to be careful. I'll see how the market goes and decide to do a little bit of dollar cost average today. And we have Apple, which is down 7.45%, which is a huge drop. It's a huge gap down. And it has dropped below everything that we had. The diagonal line of support out here becomes the diagonal line of resistance. And this minor line of support becomes a minor line of resistance. We are somewhere out here, 207.22. So I have to search for what we could see as potential supports. And I think that we would have a support. I need to work out on this. I think I'm seeing a resistance out here and a support out here and a potential resistance out here. So I would say that we could have a little bit of support out here and for today. And then the next one, this red line, I'll convert this into a green line to make it a support. So these are the two support I can see for Apple right now. I'll work on it with different time frames to see if I can come up with some other support lines. So this is 207.21 and we are at 207.25. Just slightly above this support. If this support holds for today, then I think we'll use this as a springboard, and our resistance for today is going to be 216.55 or 216.5, something like that. Just you can imagine 216.2 to 216.5 is going to be our first resistance. The second resistance is going to be 218.35, and our first support is going to be 207.37, and our second support is going to be all the way down to 192.17. And remember, we have a target from our previous bear flag pattern at 188.93. We may possibly achieve that target as well. So that's what we have here. Microsoft is down 2.39% today. So I'm going to say that our support today is going to be 380.14. Sorry, our resistance today is going to be 380.14, and our support today is going to be 380.04. So let me quickly change the color out here and make it red. And our price right now in the pre-market session is somewhere out here, 373.26. This thin orange line, which you may not be able to see in your smaller devices. So that's the support that I'm seeing. That's the range in which Microsoft is supposed to operate today. Tesla, there has been rumors that Tesla is saying that, the rumor is saying that Doge is going to be losing Elon Musk very soon. And therefore, Tesla rallied yesterday. And I was looking at some other channel where they said that it's just a rumor. Trump has said it's just a rumor. And then I read a news article today saying that Trump is going to fire Elon Musk. So I don't know what's happening with that. So Tesla is likely to be very volatile depending on who is hearing what kind of a news. But Tesla has lost 5.30% in pre-market trades. I'm resolving today that I'm going to leave Tesla be. It's very volatile stock. And Hot Dog is saying Apple has no innovation at the moment, just a moat. I agree with you 100%. I have shorted Apple, but I'm not able to see my returns. Maybe today I'll get an opportunity to get some returns out of the Apple short. And then David Best is saying below 2%, so no money left to keep buying. American saving rate has to drop below 2%. David Best is looking at a whole lot of fundamentals, but as a retail investor, I'm trying to think very simplified because I look at many channels. And there are experts who are running YouTube channels. They are talking about option expiries. They are talking about CTAs. They are talking about yield curve inversion, etc., etc. I mean, many of those things are beyond my capability to understand the call walls and other things. But what I'm thinking is that if it's in the news, it's in the price. So the market is already working for us. It's easier to see what is happening, looking at the trend and going along with that using technical analysis. So that's the approach I have taken. But David and anybody in the channel who is commenting out here, your feedback is most welcome. And I get the benefit of that in the sense that I keep that in mind when I do my trade. But at the same time, we have to remember there is so much of data that is available in the market, and different data is from different time frames. Some is delayed data, some is forward looking, some are backward looking. Putting that all together, making the big picture more relevant for us and in time, and to make a call. That's very dicey for us as retail investors. There are institutions and there are much more savvy investors with AI systems and very fast trading systems and dark pools and other things that they can use. So it's a bit overkill in the sense that like using a bulldozer to go to the office or to the shopping mall. That's what I'm feeling after so many years of trading. But I appreciate the fact that you're looking at so many other things that are going to be involved. And my processing capacity is limited. So I'm going to focus on the trends that are coming in. I may lose some money here and there. Michael Mathoff is saying, fine, Raj, I'm also short in Apple. I will try to close it for 205 USD. Nice to know, Michael, that you were also short. We were thinking alike. I've been holding that short for a while now because I couldn't believe why Apple is going up, especially with China being under the scanner and pushing so hard. And the talk of reciprocal tariffs means the Apple production in India was not going to be any good either. So I was thinking it was high time Apple went down. So I'm seeing that today. So simpatico out here. Most retailers will lose everything going forward. Agreed, 100%. Then we go on to Oracle. Oracle is down 3.03%. Our support for today is 135.60. Our resistance is 143.00. And then AMD. AMD is down 4.88%. It has not suffered as badly as others, I think. But AMD is going to have a resistance of today of around 102.84, and the support is going to be 94.93. And I think that even before that, I can see another support out here, which I'm going to color green, and that support is going to be 96.02. So that's the range of operation for AMD. Next, I'm going to SMCI. Guys, I think I'll forego SMCI, AVGO and all. I'm going to go to Palantir, which is more volatile. And we have a resistance at 83.85, which is going to perform the role of resistance today. And we have got the 100-day exponential sitting at 78.69. It's a line out here which you will not see in your smaller devices. So I apologize for that. It is 78.69. That's going to be the next support for Palantir. After that, the next support is going to be 73.37. To the extent that Palantir is already above the 200-day exponential moving average, I would say that it's stronger than the other stocks, but its PE is really bad. On the other hand, even if the defense expenditure is cut, a lot of geopolitical stress is being created, and that could lead to more business for Palantir. So I would not go short on Palantir yet. Palantir can grow legs and start running very fast. SMH, the semiconductor ETF, it's down 4.28%, just like AMD. If NVIDIA and AMD start moving, SMH will also move up. It's got a support at 201.18, and it's got a resistance, which is the 9-day exponential at 217.54. And I'm just going to scroll out a little bit. Please bear with me. I'm going to find you another support line. And the next support line is going to be out here. It's going to be more like a rectangle. So again, pardon me for doing this to you guys. I'm operating on the fly. So I'm about to work on this a little bit. Where did it go? Okay, it's here, somewhere out here. So I'm going to take this here, pull it out, and bring it all the way up to here and pull it a little bit out there, and then fine tune it a little bit. So this is the area. The top is the first support that you're going to have here. Let me make this green first so that we don't mistake it. So on the top, the first support is 197.56. On the bottom, the next support is 196.64. In between is a lot of purchasing power out there. So that's going to help us. And then FNGD, which is what I'm watching very carefully. Yesterday, I sold half of my FNGD at a loss. I was very afraid because the market had rallied. Typical retail investor move. So I'm not buying it back, but I have half of that in the portfolio that we are tracking, and all of my holding of FNGD in the other portfolio, which we are not tracking. So that's doing very well. So overall, I'm okay with FNGD where it is. It's going to get me a lot of money today. And then we are looking at what else do we see here. Netflix is going to have earnings coming up very soon. Netflix is down 2.63%. Again, it's going to be a discretionary investment because there are IPTVs which allow everything, and people might kind of switch on into that. So Netflix can take a drop. The next support for Netflix is 908.48, which happens to be the 100-day exponential moving average. We are just $2 above that right now in pre-market trade. We're at 210.88. And this support we saw yesterday is going to be converted into a resistance. And we have the next support after the 100-day exponential, and that support is at 868.67. What else do we have here that I want to cover? I'll just look at Temu for a hot dog and see what's happening with Temu. Temu is down 8.98. So hot dog, if you already sold it, you're lucky. If you're not sold it, I feel for you. Our line of resistance out here says that our next resistance is going to be 47.14 today, or somewhere around 47 to 47.50. That's a range of resistance. I can see that. And our support is going to be 42.90. Right now, we are somewhere in between here at 45.41. So that's what I have for Temu. And Celsius Holdings is looking negative, 5.90 down, but still on top of the bull channel. But we have converted our support which is at 35.24 into a resistance. We are at 34.58 today. And our next support is going to be the 20-day exponential, which is sitting at 32.06. So that's what we are having here. And what else do I have here? That's about it. So those of you who are online out here and you are looking for some information on genomics, please let me know any ticker that you're looking for that you want me to check out. Because yesterday in genomics, I had said that you can come here and ask the questions. I didn't do any technical analysis yesterday. How is Lulu and Nike doing, Raj? Nike is bad. Nike is really bad. Let's go to Nike. Let's go to Nike. It's in my list in a different one. So we have Nike out here. Nike is down 11.31%. Vietnam is hit. I don't know if Nike has manufacturing facilities out there. The Kanye debacle also brought it down. We have a huge gap down here, which will be attracting it. And it was kind of attracting it before the tariffs happened. And the tariffs have taken it far down. It's gone down out here. We closed up here yesterday, and post-market, we came down, and pre-market, we are down here at 57.59. I think Nike is a gone case right now. I won't even venture on that. I had a lot of losses on Nike. I held it for almost a year and finally sold it. PayPal is also something I made loss on it and I finally sold it. They were long-term holdings which didn't go well. So I'm not happy with that. And David is saying Nike, like Apple, lost their way to innovate. Yeah, absolutely. And competition is eating away. Debt over 100%. David Best is saying, yeah, the Warren Buffett indicator was flashing a long time ago. Buffett followed his indicator. He's sitting on a lot of cash. My favorite right now is Berkshire Hathaway. That's what I would say. Nike produce a lot in Vietnam. So do Vans and Adidas and most other brands. So Nike is going to suffer. Thanks for that information, Michael. Nike is suffering. So that's about it, guys. Unless you have any other ticker you want to do, or if you want to have any discussion among yourselves with me, I'm most open. If you have any theories, what's going to happen, what is your plan for today? I'm looking at the comment section and the chat section. I'm looking at the live chat out here. You can tell me what you're planning to do. While you're doing that, I'm going to show you what I'm looking at. I'm a bit afraid to open my portfolio out here because I may have my account numbers, which will not be good. So I'm not able to do that here. But I'll just give you an overall overview of where my portfolio is. I've got FNGD in a profitable position. I've got Apple shorts, which were negative. It's going to go positive. I've got Amazon long, which is really in a bad situation right now, but I'm going to hold it for the long term because I believe in Amazon. I've got dollar cost average position in Google. I've got 200 shares of Berkshire, which I bought back after booking profit of around $4,500 and selling all of my holdings in Berkshire for $40.20. And then I started buying 200. That was in profit yesterday. But today, if it drops further, then I would buy another 200, waiting for it to go down further so that I can dollar cost average and buy back everything that I sold in Berkshire. On another portfolio, I have all the Berkshire Hathaway holdings still out there. So I'll try to dollar cost average and buy some more the moment I go into a loss in there. So that's my plan for now. And I'll start selling off 100 shares of Berkshire Hathaway in that particular portfolio as the price goes down. And at some point, I'll start buying up. So I may not make as much profit in the other portfolio, but I'll still book profits and start buying when the price starts coming up. So that's what I'm going to do with those two portfolios. The other thing I have is NVIDIA. I have lots of NVIDIA. I'm dollar cost averaging down on that. My targets to buy on a dollar cost average is Microsoft and Meta. So those two are also in my sights. So that's the overall of what I got. I'm not even looking at genomics right now. So I'm seeing on the comment section, Joe Williams, hot dog is saying just watching for next few weeks, I think. And David West is saying plan today, Marvel the selling. And yeah, that would be a good idea. Don't rush, think very carefully, because once you put the money in there, you lose control. And Michael Matoff is saying, I hold shorts in Walmart and Starbucks. Oh, okay. Now, Michael, I think that I wouldn't go short on Walmart, in my opinion. Of course, this is not financial advice. You may be right. I might be wrong. I'm thinking that both Walmart and Costco have the opportunity to reorganize their inventory. I'll give you an example out here. I go to a grocery shop called Food Basics, which is very near to my house. It sells all the groceries. Now, when we had this spat with the United States, they managed to get alternatives for everything, right from peanut butter to orange juice to everything that was American. And they have more Mexican and Canadian goods in place. And people are buying the Mexican and Canadian stuff, and they're avoiding the US stuff. So when similar things start happening in Walmart, because those kind of tariffed items will become expensive, Walmart will be able to change their consignments. I believe a good deal of Walmart's inventory is consignment, where they do not buy it. They sell it, take the profit, commission, and then remit the proceeds to the consignment holder, especially for things like diamond jewelry and all that stuff. So Walmart, Costco, and companies like that, I think they will manage to modify their inventory, and they will still be able to increase their staples and behave more like a staple stock. So I wouldn't bet against Walmart, but Starbucks, yes, absolutely, I'd bet against Starbucks. So that's what I'm thinking. And David Best is saying, best strategy, don't buy nothing for 12 to 18 months, hoard money instead. And Inf is saying, best strategy is to have fun and stay based. That's a very innocent comment, Inf. I like your benign approach. I'm happy for you. Then you are enjoying your vacation, obviously. David Best is saying, watch everyone else catch a falling knife. Yeah, it's a pleasure to do that. Walmart is too expensive, 30x earnings. You're absolutely right. So I sold all my Walmart and Costco and took profit already. I'm waiting for it to come down. And I'm going to start buying that because I firmly believe that Walmart will do very well. It will go into the staples category. And I don't want to buy a staples ETF and buy everything in a bucket, but I have bought P&G, and I'm going to buy Walmart and Costco. I'm going to dollar cost average down on them. Everything is overvalued. Of course, everything is overvalued. We have this cheap money, right? David, you already pointed out. We have the cheap money going on where a lot of money has been printed. The COVID stimulus is still with us. Now, that's where I'm thinking the universal basic income is our ultimate support. I believe one of the folly that Trump has done is he has risked a whole lot of things and burnt a whole lot of goodwill and international capital by trying to get manufacturing into the United States. It's totally wrong because, first of all, many companies will pay lip service and say we are going to invest X amount of dollars and build local capacity, knowing that Trump might lose in the midterms, the Congress, and he will have a lame duck presidency, or that at the end of 4 years he will be gone, and some other policy may come in. So they may not bring. And those who make manufacturing within the US, manufacturing is going to be a place where the maximum impact of physical AI is going to be felt. Robotics going to take over, and there will be less and less employment in the manufacturing sector. And that's where we are going to get all the productivity Kathy Wood was talking about. That's why we do robotics. And that's going to happen within the next 10 years. So overall, for any CEO investing in manufacturing capacity in US, it's not very attractive. And with Trump, you don't know what he's going to think of tomorrow. So I think that he has played his gambit. I don't think it's going to turn out very well overall. And probably that's what many analysts are thinking. And that's why they're saying absolutely nothing good coming out of Trump's tariff announcement. That's what they are saying. David Best is saying, get ready for halting in markets over next 6 months. Trump was 2% rates to roll over third of long-term debts. Yeah, he wants lower 10-year yields so that he can renew at a lesser price. The way to save 500 billion in interest. But then it's like cost benefit analysis, right? Penny wise, pound foolish. I don't know how it will happen. If I knew that, I would have been president of United States or something like that. So we have to give credit to Donald Trump because all of us can say anything. The fact remains that he managed to convince a whole lot of people the second time, and he is in the highest office in the world, the president of United States. So he has earned the ability to do that. This reminds me of the situation many years ago. At that time, I was an independent contractor doing project management in banks, and I was making a lot of money per hour. And at that time, I used to lease the latest BMW, and I would change those cars every 2 years to go for the latest model. And I had another friend who was also starting to contract, and he started seeing that kind of money coming in. And he wanted to test drive my car. So I had gone to his home for lunch. He had invited me and he said, I want to drive your car and see how it goes. Okay, I sat next to him. And the way he drove was scary. He went very fast. He went over the speed bumps and all that stuff. And I was saying, hey guys, slow down. It's my car. It's take care of it a little bit. But there was nothing on it for him. And he was on the wheels for the first time on a BMW. And he just went for what he thought would happen. And I was feeling very worried about it. And after that, I swore I will never allow him to get on the driver's seat. Trump is somewhat like that friend of mine. He's in the driver's seat in the White House, and he sees a lot of buttons and levers in the gas pedal. When he says something, it has got so much impact. It's like you press on the gas and the engine revs up and it goes. So he's experiencing all those things, and he now knows absolute power. So we don't know what's going to come out of it. And there's no calibration or anything. Once he gets used to all of those things, he understands the cause-effect relationship, which is what differentiates idiots from smart people or sentient people. Smart and sentient people have the cause-effect relationship. They would say, I did this and that happened. I didn't like it, so I'm not going to do that. The verdict is still out on Trump because last time he played around with China and they stopped soybean imports and other things, and he had to give billions of dollars of subsidy to farmers, and they were very angry, and he lost the election. But again, this time around, he's still poking the same monster. So we don't know what's going to happen. We'll say that he's a smart man. He won the election and he's become president of the United States. It's not easy to do that, man. And he has done it. So I'm going to give him the benefit of doubt, but I'm going to look at the trends and I'm going to play the trends. Michael is saying message retracted. I'm sorry, I didn't read the message, Michael. I didn't get it before. David Best says collapse in NFP numbers will trigger rates cuts ahead. Bond vigilantes will also be out there. if the US dollar loses its charm as a reserve currency, and then things will go crazy. Infi saying buy the tip. Yeah, you're talking about the TIP. David Best says reflection of weakness when Fed reacts. Okay, yeah, we'll see what happens when Jerome Powell comes. Now, it's almost 8:34, guys. This was the most interesting live stream I have done. It makes me so happy and actually reluctant to end the live stream. Thank you all for so much of interaction. Please just give me one of your best advice for today. Raj, do this, don't do that. I'm going to look at that, print it out. I'm going to keep that in mind while I'm doing my trading. And I'll let you know what happens when we do the live stream tomorrow. So that's what I would say. And with that, guys, I'm going to end this live stream and I'm going to go for my breakfast. I'm mighty hungry right now. My sugar levels are dropping. Before I go, I'm curious. I want to show you the futures. I'm sure you guys are also keen about the futures. The futures are almost stable at 3.31. And S&P 500 is down 3.31. And NASDAQ futures is down 3.88. I think more or less it's where we left it when we did our analysis. So the whole market is waiting for that. Dollar index also, it has improved a little bit. And then the 10-year yields, they are, 10-year is down minus 1.89%. Not much of it. Have a cup of tea, British made remedy to your problems. Yeah, that's a very good advice for me. And Joe Williams, just watch. Yes, Joe, I'll avoid the temptation to jump in. And and my best of luck to all of you guys. Thanks for joining here and becoming a part of my community out here. Thank you very much, guys, from the bottom of my heart. This was the best live stream I've ever had. I do not wish that we have crisis like that, but I wish we have more of these live streams. Thanks and have a great day. Bye for now.